This podcast is brought to you by Customplan Financial Advisors Inc., an independent insurance managing general agency in Canada. FINANCIALPODCAST.ca was developed with one goal in mind: to educate Canadians on important topics that affect their financial well-being and make it readily available to all. We welcome you to plug in and learn with us. If you have questions, please email us at contact@financialpodcast.ca.
Hi, Barry. This is Dennis Roberts with Customplan Financial. And today I have with me Barry Haggis from Young & Haggis Insurance. Welcome to today's podcast, Barry.
Oh, thank you so much for having me, Dennis. I appreciate it.
So why don't you get started by just giving us a little bit of a bio of who you are, how you got into the insurance industry, and what services you have to offer.
Absolutely, we can do that. So I have been involved in insurance since May of 2011. It's a family business that we have. So I'm third generation. My grandfather started it back in the 60s in his basement in his little house in Chinook Park in Calgary. And then since then, we've grown it up over the last 50 plus years and into a massive book. We got a good brokerage here, and we do absolutely everything. So we do home, auto. We have a life insurance arm. We'll do trailers. We'll do your boat. We'll do liability, commercial, small business. Basically anything that you need, we have a professional to help you out. So it's been absolutely great. Like a lot of people who are in insurance, I kind of fell into it. It's not something that most kids out of high school or university think, oh, I'm going to be an insurance broker, and how exciting it is. But now that I'm in it, I have to say I wouldn't change it for the world. I love what I do, and I'm very proud of what we do here as well.
Well, that sounds great. I always like to hear of a family business that's been passed from one generation to another. And so I've got a few questions for you. First of all, starting with the auto insurance, Barry, what are the benefits of using a broker to find the right insurance for you as opposed to a direct writer or using an online system to purchase insurance on your own?
Yeah, and that's another kind of thing. I mean, people look at it, it's not something that you purchase and have. It's a more of a commodity that you purchase to protect yourself. So you can't see it. You think it's an easy product, but it's really not. A lot of people, misconception is they think that brokers are just glorified middlemen, which is half truth. I mean, I'll be honest, we are kind of in that middle between the client and the insurance companies, but we are professionals in our field. We know what we're doing. We have to take a minimum of 2 exams. We need to pass that to get licensed. Those pass rates on those exams are below 50%. Every year we have to take 15 hours of continued education to maintain our licenses. So we are professionals, and we do know what we're doing. It's no more expensive for a client to use a broker, which some people seem to think as well. Insurance companies pay us a commission, so we place risks properly for our client. What's going to best suit their needs? What coverage do they need, and where can we find the best premium for that, where they're not going to have any holes? Direct writers, those online stuff, they sound great, and the whole idea of being able to buy home insurance on your phone at 2 a.m. while you're lying in bed, I mean, yeah, that's a great thought, but really it's not something that you can just purchase off of a whim there. So it's the level of service that we can offer as well. With those online companies and direct writers, you can call them 5 times in a week and talk to 5 different people. Brokerages, we can all offer that level of service where you're going to have your guy or your girl. You can call me directly, ask for advice, make any changes you need. If you bought a new car, I can get you set up. Or if you just want to chat about something that got brought up at the dinner table the night before, I mean, anything like that, we're always going to be there. So we're really there as just that sense of comfort for somebody to actually talk to a human being, build a reputation or a relationship with, and someone that you can actually trust to, insure probably one of the biggest purchases you're ever going to make in your life.
Well, that's good. I mean, because buying insurance can be a complicated product, and it's not like going and doing some online shopping and buying a few pieces for your wardrobe. You really need somebody who knows what they're doing and help you out that way.
Absolutely, yeah.
I know when I moved to Alberta here from another province where we didn't have a lot of options when it came to insurance, I found it a little overwhelming at first, and I really quite appreciated the service that a broker offered me.
Oh, Absolutely. And I mean, that's what we're there for. This is what I'm going to be here 5 days a week, 8 hours a day, probably for the rest of my life. And that's what we really pride ourselves on, our relationships with our clients. And I know most of my guys by name, and they do. It's not something that you can just go out and buy on a whim without risking a whole lot of your assets.
So. Exactly.
You are listening to financialpodcast.ca.
Can one broker have cheaper insurance rates than another for an identical quote with the same company?
I mean, yes and no. Our industry, it's fairly regulated, so it's not too common that you're going to find massive savings going from one broker to another. But that being said, there are exceptions to that rule. I mean, there are some brokerages who still call themselves brokerages, but they're not necessarily independent. Like us, we're completely independent, so we can work with our 5 companies and do whatever we want. But there are some brokerages where some of those big companies might have a toe in the water, so they'll tell them, look, if you give us more business, and you have to because we own you, you can offer a 10% discount here and there. Some brokerages can also offer group plans for people like engineers or lawyers or doctors and that kind of stuff. But generally, we all work with most of the same companies. Quotes will usually be similar. And I think what it comes down to for brokerages to differentiate themselves is going to be that service and the relationships, and that's what's kind of going to set you apart from all the others.
I would have to agree. I found out that when I was shopping for insurance that there was the prices were very competitive, and what it really boiled down to was the broker that I felt that understood my needs the best and was able to give me the best service.
Yeah, absolutely. And that's how a lot of people feel. And sometimes you're just not going to vibe with somebody and the energies aren't working and that kind of thing. But normally, yeah, you want to find somebody that you can really trust, because these are some important things we're dealing with.
Exactly. So what are some typical misconceptions about auto insurance? For example, does the color of your vehicle affect your insurance premium? Or I know driving record does, but I don't know so much about the color of your vehicle.
Yeah, when it's funny, we get that all the time. So I'll have a client call me, telling me he bought a new car, and that's the first thing he tells me. And I say, okay, what'd you get? And he goes, well, it's red, or well, it's a blue silvery kind of thing. But yeah, no, that has nothing to do with it. I know the stories are out there that I think the last one I heard was that red vehicles attract more attention from the police while you're driving them because they're flashier. So you're going to get pulled over more, which means it's going to be more expensive to insure. None of that is true. It's all, I don't know where it started, but we have a good chuckle about that all the time. So It's all driving record and then rate groups and basically how they do it. And these are guys like the actuaries who are way better at math and statistics than I am, but they go look back over the last 5 years and they actually have it down to a science to figure out how much a vehicle costs on average to repair when it gets into an accident, how often a certain type of vehicle is getting into an accident, how often a certain type of vehicle is stolen, things like that. And of course, your driving record. I mean, if you've had 3 accidents in the last 2 years, yeah, you're going to be paying more than Joe Schmo who's been clean for 20 years kind of thing.
Yeah, exactly.
It's also funny because, I mean, like a 2011 Honda Civic can sometimes be way more to insure than a 2014 Ford Flex. Because Civics just, in the last 5 years, they've gotten into more accidents. Insurance has paid out more because of this type of vehicle. So those rate groups get jacked up and there you have it. And
there's different types of vehicles that people drive differently, and the insurance rates go up with those vehicles as well.
That's part of it as well. I mean, you hate to say it, but some vehicles are more driven by.
I know. I see it every day on Deerfoot. So
there you go.
So, does your personal auto insurance policy cover you when you rent a vehicle?
Yes. Well, it should. I mean, every policy, yeah. So every policy that leaves our office, unless the client specifically tells us he doesn't want it, will have that specific endorsement on there. So it's an endorsement called an SEF 27, which should be on everybody who's listening's policy. And that covers you. It basically extends the coverage from your policy that you own here in Alberta to a rental car anywhere in North America. So if you're going to Hawaii renting a car for a week with your family, you can decline the $50 a day insurance that they try to get you to buy there. So it covers you up to $50,000 or 40 to 50, depending on the company you're with. That's kind of varies a little bit. So typically, unless you're going to rent a Ferrari and rip it up the I-5 down to California, you're probably going to be okay that way.
I'm surprised how few people are aware of that rider, I guess it's called, or that option. I know I carry it myself, and it saves me a lot of money when it comes to renting a vehicle.
Absolutely. We get that phone call all the time, too, guys saying, like, hey, I'm heading down to California, going to Disneyland, I'm renting a car, what do I have to do? Nothing. Then you can explain it to them, and yeah, they're shocked. They're going, oh, perfect. saves them an extra $50, buy them a few more ice creams at Disneyland, whatever it is.
Yeah, and I think my rider only cost me about $35 or $40 a year. So, I mean, one rental or one day, and you've got it covered.
You got it.
Exactly. So what are some important points to look for when given an auto insurance quote?
The most important thing is got to be your liability limit. So there's some mandatory coverage that every auto quote's going to include, and that's going to be your liability, your accident benefits, and your SCF 44 family protection. Everything else can be a throw-in or you can decline it. But that liability limit is the main one. So when I get a new client, when they phone me and ask me to look at their auto policy, first thing I ask them is what their liability limit is, and 9 times out of 10 they'll tell me it's $1 million, and that's what the standard is across Alberta. Most people will write $1 million. There's a few people who will write less than $1 million, which I think is absolutely crazy. But in our office, we make it a point not to let anything out of our office with less than $2 million. So liability is what covers you as the third party. So if you're driving your vehicle, you rear end a van that has 5 people in it, you injure 3 of them who are in the hospital, 1 can't work anymore, and this sort of stuff, that liability coverage is what's going to pay to defend you in court and pay for any of those medical bills that any of those passengers in that van are now going to come after you with. So 10 years ago, $1 million was probably fine. I know it sounds like a lot of money. It's really not. That goes very, very quickly once you get into court cases and paying lawyers and medical fees and things like that. So your first question should be, if you go get an online quote or whoever it is, but whoever you're working with, is ask them to confirm what liability limit they quoted you. If they say $1 million, I definitely recommend asking for a quote with $2 million. For a good driver who has a decent record, it's only going to be about another $15 a month to bump it up to $2 million. So that's definitely the most important thing. And then there's obviously, of course, all the kind of little finicky stuff that comes along with auto insurance that a lot of people might not know about, like that rental car coverage we just talked about. Like replacement cost in a new vehicle. If you're buying a 2018 Subaru, you can add an endorsement on your policy that's going to hold the value of that vehicle for the first 5 years that you buy it. So if you write that vehicle off in 3 years, instead of them depreciating it by $15,000 and only giving you $20,000 when you paid $35,000, you basically get $35,000 or exactly what you pay for it to buy a new vehicle. So it costs a little bit more money, but that's something that's totally worth it in the long run.
And then also, if you use your vehicle for work or employment rather than just commuting to work, or if you use it for business, or if you're calling, or if you're transporting clients or even children to school, carpooling, you need to look at some different liabilities issues there.
Absolutely, yeah. So you need at bare minimum $2 million if you're going to be carrying people around, and then the whole carrying passengers for compensation with Uber and Lyft and all that sort of stuff coming, that's a brand new thing. So you have to add business use to that and make notes all over the policy so they're aware. Anything, if you're in sales or real estate and you're driving clients around, you need to make sure that you have that 07 business use listed on your policy. In the event of a claim, that's grounds for denial of a claim. If the insurance company says, "Oh, we didn't know you were driving clients around," sorry, we're denying the claim. So
absolutely. So those are good things to know. So when it comes to like a claims service, does the broker assist in claims, and how do you get involved, or do you get involved?
We step in if we have to. I mean, in a perfect world, we take a call from our client. He tells me he got into an accident somewhere, or he had a sewer backup in his basement. Okay, great. I'll submit the claim for him, talk him through it. And then if everything goes great, we won't even hear from the client again until, the next year's renewal, because everybody's happy and everything got fixed and everyone's just all sunshine and rainbows. This isn't always the case, obviously, as we've all heard horror stories of insurance companies denying claims, not paying out what the client thinks they should have gotten for a vehicle, things like that. So, or just not returning phone calls, which has been happening lately as people get busier. So in those situations, we're always going to be our client's first call. So I'll always tell my guys, if you get into a claim, don't call it into the company, call it into me first so we can look at it, chat about it, decide whether we want to even go through insurance. Maybe it's not worth it. And if we do go through, then I say, if anything happens, if you feel the wheels are falling off, let me know so I can step in early. Sometimes we just have to make a quick phone call and, get the ball rolling again because it got stuck on somebody's desk. Other times we have to really step in and go to bat for our clients and do our research and really step up for them. And I mean, that's another thing, going back to the benefits of a broker that we talked about earlier. I mean, dealing with those direct writers and the online stuff, if you call in a claim, you're talking to a direct employee of the insurance company who's trying to settle your claim. So if it's a matter of $1,000 here and there, or just getting the same claim settled quickly, I mean, they're probably not going to have your back. They're probably going to be protecting their employer, the guy who signs their paycheck. Whereas us as brokers, we work for our clients. You guys are our first, we're your first line of defense, basically, so we can step in and do what we have to do.
Well, that's been my experience. Anytime I had a claim, I called my broker. They put me in touch, or got the adjuster in touch with me, and things were looked after. And Bob was your uncle, and it all went very well. So I think that's good advice. So now, is there some merit to having your home insurance and auto insurance with the same broker or same company?
Always, yeah. I mean, it's always best to kind of keep everything in under one roof on the broker side, just because then again, you're just talking to the one person. You know the guy, he knows you, your file and everything. With the same companies, sometimes it doesn't always work out that way. I do have a few clients where it's just worked out better for the client to have the auto with one company and the home with another, just because of area codes and premiums and things like that. But ideally, yeah, you'd like to have it all together. Benefits are like deductibles in the event of a claim. If you ever do have a claim that involves both, so an auto claim and a home claim, like let's say, for example, your car's parked at a mall, somebody walks by, smashes your window, reaches in, steals your sunglasses, your gym bag, and your really expensive Louis Vuitton purse that probably shouldn't have been in the car anyway. But normally that would be a claim for the auto, so you'd have to put an auto claim in to fix the window, which would be $250 deductible on that, and then you need to make a claim on your home insurance for the contents that were stolen. So that means you got one claim for auto, $250, a claim for your house, probably either $500 or $1,000, depending on what your deductible is there. When they're together, most companies will normally just waive the one deductible and say, okay, same company, one claim, we'll just wipe it, we'll do the one, so you do save a bit of money, and it's just easier to settle the claims that way as well.
Yeah, and sometimes there's a bit of a discount if you package all your insurance at one company.
Not to mention discounts. I mean, most companies offer between 10 and 15%, so it's a good way to save $150 to $200 on each policy every year as well.
Well, I like the idea because it's just one company to deal with, one broker to deal with, and you kind of have everything, your insurance all together, and it just makes it a little easier to keep on top of.
Absolutely.
You are listening to
FINANCIALPODCAST.ca.
So, home insurance, how is the rebuild cost of your home determined? Say, for example, a tornado took my house out or burned my house down. How is the recost or the rebuild cost of my house determined there?
Yeah, well, we'll touch wood for that not happening to you, but to figure that out and that's another one we get. That's a common question that I get all the time as well. We'll do a quote and I'll send it to somebody and they'll call back and say, okay, well, why are we insuring my house for $500,000 when I bought it for $750,000? They all think that what the real estate value is what they need to insure the home worth and all that sort of stuff, which isn't the case. So the way we do it is there's a bunch of systems out there that are used industry-wide all across Canada, and they're computer programs where we'll talk to the client, go through all the things about his house. What's the square footage? Is it a 2-story bungalow? How many bathrooms do you have? What's the flooring? All that kind of stuff, and punch all this information into our system. This goes out, uses the postal code and similar bills from around the area to kick out that rebuild cost to us. So all we're concerned about is, yes, if that fire came and took your house to the ground, if a tornado blew through and we needed to rebuild it tomorrow, how much would it cost to build your house exactly as it was the day before the loss? So that kicks that out to us and gives us a very specific number, like, $523,492. And they take debris removal into it, building costs, labor, absolutely everything. So as long as we insure to that value, that's the important thing, because then all of my companies will put guaranteed replacement costs on that house as well. So that means that if we are insuring it, that system tells us to insure it for $550,000. It burns down tomorrow. While we're rebuilding it, we find out it costs closer to $650,000, $675,000. You're going to get the full rebuild cost of $675,000 or whatever that is, and that's built right into the wording in the home policy as well. So our main concern is figuring out what that rebuild cost is, insuring it to that exact value, and then making sure that we have that guaranteed replacement cost endorsement on the home policy. And that's what covers your butt for anything above and beyond.
I think what a lot of people don't realize is the land cost of your home, which could, usually be $250,000. And of course, you don't have to rebuild the land or repurchase the land. So it's the brick and mortar cost is what you're looking at.
That's exactly what it is. So yeah, we're not, if the house burns down, we don't have to find you a new lot and build you a new house. The lot's fine. We just rebuild the house. So real estate, is going to take all your land and everything into account, where we're just worried about the dwelling.
So what is generally covered under your basic home insurance policy and, a typical insurance policy for your home?
Yeah, so, and this is where we get back to the complicated product that we are dealing with here. I mean, home insurance policies are so finicky and so intricate with little things. I've always been taught from kind of day one when I started getting my education on my licensing that the home insurance policy will giveth, and then it will take it away, and then it will give it back to you. So the most basic of basic home insurance policies is going to cover you for fire at the very least. It all started as fire insurance policies, fire insurance, and a fire is a fire is a fire. If it's house is on fire, it's going to be covered. But there are even funny things with that, like just to explain how weird these little things can be. If you're ironing a shirt and then you walk away, go to the kitchen, grab a drink of water. In the meantime, that shirt catches fire, which catches the ironing board on fire, which catches the room on fire, and then the entire laundry room burns down. Everything's going to be insured except for that shirt that you were ironing, because that is where you were applying the heat to. So you're going to be covered under insurance for absolutely everything, but they're not going to give you $60 for that shirt that actually caught fire. So little things like that can just make it that much more confusing. You have water damage coverage. Every policy you can have water damage. But does that mean sewer backup and overland water? No, that means you're covered for burst pipes. So if a pipe bursts in your wall, you're going to be covered under water damage. But sewer backup is not covered under that. So you need to add that additionally. You have to pay for that. You have to ask for that specifically. You have to tell what limit you want. So now you have sewer backup. Does that mean that you have overland water coverage? No, you have to ask for that as well. So it's a lot of these things where if you don't know what you need or what you want, you can really get yourself into a lot of trouble here just on your basic home policy, thinking, well, I bought this policy online, I've got to be covered for everything, because that's really not the case.
And once again, that's the importance of having a broker, is because insurance is a complicated product, and to be so easy to, if you don't know what questions to ask, you just don't know.
Yeah, and I've always kind of said too, I know nothing about investments, so I'm not going to take a bunch of my money and just throw it on the stock market, because I know nothing about it. I'd want my guy to call and be like, hey, what should I do here?
So who should have flood insurance? Who should have sewerage backup? And of course, then you've got burst pipe insurance. But I live in a high part of Calgary. Do I need flood insurance?
So flood insurance is actually, we call it flood insurance because it came about after those 2013 floods when Calgary got so devastated. So back then, nobody had any flood insurance, or this overland water is what they now call it. So it's technically called overland water coverage, but is generally referred to as flood insurance. So it covers you for any water that, in the event of a flood, that would enter your dwelling under doorways, through window wells, things like that. But so if you're up high and nowhere near a river, you're probably going to be fine. But the one exception to that is this overland water also will cover you for seepage.
You are listening to FINANCIALPODCAST.ca.
Like that no one was ever covered for before. So if it does rain for a week straight in June, like can happen in Calgary, and the ground around your basement windows just gets absolutely saturated, and then water goes in through the cracks in your foundation and puts just water in your basement, overland water will actually cover that for you.
Okay.
So whenever anybody calls me and says, well, I'm up on a hill, I'm not nowhere near the river, I don't want this, I'll just tell them, okay, that's fine, but it's $60 a year, and it also covers you for seepage and leakage if it rains for 3 weeks. And then that makes them go, oh, okay, well, maybe I should have it. So, I'm always going to say better to be safe than sorry, but if somebody doesn't want it, fine. I'll probably get you to sign a little form of paper saying I offered it to you and you didn't want it. But
exactly.
Yeah.
That's a good deal. So your contents are covered. So what contents are covered? Is everything covered, or is there a limit on what's covered with your contents?
Contents are generally always going to be covered. The way that most companies will do contents is they'll take 80% of what your home is insured for and stick that right on the contents and build that into the premium. So that's what's included. So the example, if you have a $450,000 insurance on your dwelling, on your house, you're automatically going to have $360,000 in contents coverage as well. And that's all going to be on a replacement cost basis. So that's essentially new for old. So if you had a 10-year-old leather couch that's been in the basement. We had a sewer backup and you had to get rid of that couch. The insurance company's not going to peruse Kijiji to find a 10-year-old leather couch for you. They'll go out, buy you essentially a new leather couch of same like kind and quality, same length, same everything, and then replace the old one with that. So it's always going to be a replacement cost on contents. The only thing to watch out for, again, on home policies are some of the high value items and items that are going to be higher risk, so stolen a lot. So bicycles, for example, a lot of companies will have a limit on mountain bikes or road bikes of $1,000. So if you have a $4,000 bicycle, you don't know about this, it gets stolen, the maximum you're going to get from the insurance company is $1,000. Jewelry as well. Most companies have like a $10,000 limit on jewelry. Again, because these are little finicky things that can get stolen, they can slip off your finger in the ocean, that kind of stuff. So to cover their butts, they sort of put limits on there that you need to be aware of. So if you have a $20,000 engagement ring, you go on your honeymoon and you're swimming in the ocean and it falls off and you try to make an insurance claim, the maximum you're going to get is $10,000 for that. So what we do is you have the option to schedule a lot of those high value items like jewelry. So it pays, it costs you a little extra premium each year, but then that item is going to be covered for full replacement costs. So it would be the full $20,000, no deductible, anywhere in the world, no matter what happens to it. You just, keep an appraisal on file so we know exactly what you paid for it, and then you're going to be covered for that.
Is it a good idea to take pictures of the contents of your home and furniture and that just to make it easier for the adjuster or the settlement, or what would you recommend?
Yeah, absolutely. I tell all my clients, because everyone's kind of got iPhones now or the smartphones that have cameras built in. So I say, just when you get home tonight, put on your video, rip through the house, open up your drawers, open up your closet, just run it through there real quick and just keep that video. Because in the event of a claim, insurance is based on utmost good faith. So we are trusting you that you're not going to intentionally commit fraud and just wake up one morning and phone in and tell me, hey, I just had a $3,000 fur coat stolen. And you're trusting us that in the event of an actual loss, we will find a way and we will reimburse you for that and pay for it if you have the coverage. Where that kind of line is it does always make it helpful. If that was the case, if you do have a $3,000 fur coat, try to keep a receipt, take a picture of it. If you have a picture of you wearing it, even better, because on that way it just cuts out all that junk about, well, is this true? Do we trust this person? How do we figure it out? So it just makes the whole thing go a lot smoother if you do have some sort of proof of ownership of anything that you have. And it takes 2 seconds. So, and we actually, our brokerage on our website, we have, and our app that we built, you can actually do that, take all your pictures of your stuff, and you can download it right to us through the app, and then we have it in our system, so you don't need it, and if anything comes up, we can pull it right off of our stuff.
That makes total sense. So anyways, tenant insurance, is it important, and who needs it?
Tenant insurance, yes. So again, very important. We and I get this one all the time, again, from a lot of younger people who've just maybe moved out for the first time and think they have nothing but secondhand furniture, and they got their mom's coffee table and their dad's old mattress and maybe $10,000 worth of stuff they don't care about. Yeah, that's fine. But as soon as a child, and I'll just focus on them for a minute, as soon as a kid moves out from mom and dad's house, you're no longer covered under mom and dad's home policy, which a lot of people might think they still are. So there goes your liability insurance, there goes your contents, all that sort of stuff. So tenant policy will still cover you for your liability again. So that's damage or bodily injury that you may cause to a third party that you're going to be negligent for, and it covers you anywhere in the world. So if you go skiing in Banff and you come flying down the hill, can't stop, and run into a child waiting to get on the chairlift and their family sues you, your tenant policy, if you have it in place, will pay to defend you in court and pay any physical damage to that child under the liability portion. Also, if you're renting a place and renting a condo and you turn the bathtub on and then go fall asleep and your bathtub floods your apartment and 2 other ones below it, the landlord and the condo corporation or whoever owns the condo is going to come after you because you were negligent, you left the water on. So without a tenant policy, that's on you. Like, you're going to have to somehow pay for all these damages, but your tenant policy would cover you for that. So, it's not about insuring your old TV or your lazy boy or anything like that. It's the liability that's going to be most important to renters.
And I know some people think that as a tenant that their landlord will have the building insured, and if there's any claims or loss that they're covered that way, but that's a false sense of security there.
It is. So yeah, they think that, none of your contents are going to be covered there. And there's always that risk that if you are negligent for something, they're not going to say, okay, yeah, I'm going to cover this through my insurance. They're going to go right after you for the person who caused it. So, and that'll happen. Yeah, the landlord will put a claim in through his own insurance and they'll probably pay for it because they have to. But then that insurance company, your landlord's insurance company, is going to come right after you as the tenant if you were negligent for it and try to get that money back. So now you can get your tenant policy involved and they battle it out that way, and then you're covered.
As a tenant, probably the liability aspect of the insurance is more important than the content coverage.
Way more important, especially like for like the university kids or whoever's moving out for the first time. It's absolutely the liability portion.
So what would I need to look out for when obtaining an home insurance quote?
So for that, I touched on a few of them. Home insurance, look for guaranteed replacement costs. That's absolutely huge. Your sewer backup limit, your overland water, if they've quoted that right out of the gate. Unfortunately, I do a bit of secret shopping with some of the direct writers and just check out to see how they do things. It's always good to know what's going on in the industry. So I used my own house and just went through and did one of those online quotes. It took me about 5 minutes. It was real handy, but the quote came in at $600 a year. So I'm going, okay, that's pretty cheap. Something's wrong with that. Like, I wish insurance was that cheap. But so I did a little bit more digging around on the website and found out that that quote didn't include sewer backup. It didn't include overland water. It didn't even offer me any hail or wind coverage, which is pretty standard. So, if I was just to think, oh, great, $600, I'm insured for everything, and bought that, I would have been absolutely screwed down the road if I ever had a claim. So ask questions, ask about special limits of insurance, like the jewelry stuff. Ask if there is a limit on sewer backup, if you can only get a maximum of $20,000, which I know some companies do, which in reality, $20,000, if you have a decent sewer backup claim, that's probably going to clean it up, pump it out, replace your furnace, and that's about it. Your $20,000 is going to be gone. So you need, just ask questions. Don't trust the online stuff, and ask as many as you can.
Well, that's good to know.
FINANCIALPODCAST.ca.
Well, anyways, that's been very good, Barry, and it's certainly been informative today. Why don't you just take a moment to tell us what services you provide and how people can get in touch with you if they would like to maybe review their insurance policies?
Absolutely, yeah. We'd be happy to do that for sure. So I'm with Young and Haggis Insurance. We're located just in the southeast in Douglasdale, but that doesn't matter. We have a website. You can go to www.young-haggis.com and check us out. We can do quick quotes, detailed quotes there. And then what that does is that gives your information directly to me so I can be in touch with you. You can call me anytime. I'm here Monday to Friday, 8:30 to 4:30 at the very least. 403-255-7781 is our office line. And Steph will take care at the front and she'll put you through to me or one of my colleagues. And even if you just have general questions and you're not a client, but you just can't get through to your guy and you just want to know something, feel free to call. We're happy to help. And I love talking the industry now, so that's how cool I am.
Well, thank you, Barry. It's been a pleasure.
Thank you so much. I really appreciate it.
You're welcome.
All right.
Bye now.
The views expressed here are those of the participants and not those of Customplan Financial Advisors Inc., its affiliates, or subsidiaries. This is not intended to serve as a complete analysis of every material fact regarding any company, industry, or security. This presentation may contain forward-looking statements. Investors are cautioned not to place undue reliance on such statements, as actual results could vary. This site and podcasts are for general information purposes only and does not constitute investment advice and is not intended as an endorsement of any specific investment product or service. Individual investors should consult with an investment professional about their personal situation. Past performance is not indicative of future results. If you are unsure about what is the best course of action for you in your financial planning, then we suggest you consult a fee-based independent financial advisor or get in touch with us to discuss your individual situation. Our phone number is 604-687-7773.